India's market regulator, SEBI, just made some big changes, and if you invest in stocks, mutual funds, or IPOs, this matters to you. In the next 5 minutes, I'll explain what SEBI approved, why it's important, and what it means for everyday investors, in simple, easy language. Hi everyone, welcome back to the channel. SEBI recently held its 212th board meeting, and several important decisions came out of it. These changes impact stockbrokers, mutual funds, IPOs, bonds, and retail investors like you and me. So let's break this down step by step. Part 1. Simpler rules for stockbrokers. First, let's talk about stockbrokers. SEBI has replaced its old 1992 stockbroker rules with new stockbroker regulations, 2025. The main goal here is very simple, clarity and ease. The new rules are 1. Shorter. 2. Written in simpler language. 3. And updated for how markets work today. SEBI removed outdated concepts like physical share certificates and cut the regulation size almost in half. This means less confusion for brokers and smoother services for investors. Part 2. Big update to mutual fund rules. Now let's come to mutual funds. This is a big one. SEBI has completely rewritten the mutual fund regulations, which were originally created back in 1996. Over the years, too many rules were added, making them complicated and hard to follow. The new mutual fund regulations, 2026, focus on 3 things. First, simpler structure and language. Second, better transparency. And third, stronger investor protection. One major change is how mutual fund expenses are shown. Earlier, taxes and charges were mixed into one number. Now, SEBI wants clearer breakups so investors can understand what they're actually paying. SEBI has also reduced expense limits and brokerage caps across many fund categories. Overall, this should help lower costs and make mutual funds more beginner-friendly. Part 3. IPOs made easier to understand. Next, IPOs. If you've ever looked at IPO documents, you know how long and confusing they can be. SEBI has now approved a short, standardized summary of IPO documents. This summary will be available even at the early draft stage. So instead of reading hundreds of pages, retail investors can quickly understand 1. What the company does. 2. Why it's raising money. 3. And the key risks involved. This step is meant to improve understanding and increase participation from retail investors. Part 4. Boost for retail investors and faster demat credit stash. SEBI also wants more retail participation in the bond market. Now, companies issuing bonds can offer incentives like extra interest or discounts to certain groups. This includes 1. Retail investors. 2. Senior citizens. 3. Women investors. 4. Armed forces personnel. Another very practical improvement, faster demat credits. Earlier, getting shares credited after paperwork could take up to 150 days. SEBI has now streamlined the process, bringing this down to around 30 days. That's a huge improvement for investors. Part 5. Governance, credit ratings and ease of doing business. Finally, SEBI approved several changes to improve governance and ease of doing business. These include 1. Relaxed rules for large debt-listed companies. 2. More flexibility for credit rating agencies. 3. And better alignment of governance norms. SEBI has also taken steps to review internal conflict of interest rules to strengthen trust and transparency. So to sum it all up, SEBI's latest board meeting was all about simplifying rules, improving transparency, and protecting investors. For beginners especially, these changes should make investing clearer, safer, and more accessible. If you found this helpful, hit the like button, subscribe for more simple finance explainers, and let me know in the comments what topic you want next. Thanks for watching, and I'll see you in the next one.